Welcome to This Week in the Index. I'm your host, Grayson Brulte. Overall, it was a mixed week in the markets with the S&P 500 ending a 3-week losing streak. For the week of August 21st, the road to Autonomy Index declined 0.26%. The S&P 500 returned 0.26%. The Nasdaq 100 returned 0.54%. The road to Autonomy Index underperformed the S&P 500 by 0.52%. The road to Autonomy Index underperformed the Nasdaq 100 by 0.80%. The top performing stocks in the road to Autonomy Index this week were Tesla, which returned 10.71%, NVIDIA, which returned 6.25%, Glencore, which returned 2.94%. While these stocks performed well, they are just 3 of the 38 publicly traded companies that are components of the road to Autonomy Index. News and opinion drives the market, and this week in autonomy, there were some developments. On Wednesday, August 23rd, NVIDIA, a Road to Autonomy Index component company, announced their fiscal results for the second quarter fiscal year 2024. The headline earnings were impressive as the company surpassed Wall Street expectations. NVIDIA reported revenue of $13.51 billion, up 88% from Q1, up 101% from a year ago, compared with estimates of $11.22 billion. Revenue at the company's data center business rose 141% to $10.32 billion in the quarter, beating analyst estimates of $7.69 billion by more than $2 billion. Overall, it was a big week for NVIDIA, and the company issued third quarter revenue guidance of $16 billion, plus or minus 2%. During the second quarter of fiscal year 2024, NVIDIA returned $3.38 billion to shareholders in the form of 7.5 million shares repurchased for $3.28 billion in cash dividends. Further bolstering their buybacks, NVIDIA announced that the board of directors approved an additional $25 billion in share repurchases without expiration on August 21st. With a stock that has risen roughly 220% in 2023, why authorize an additional share repurchase now? Share buybacks work best when the board feels that the stock is undervalued. How can the board feel that NVIDIA shares are undervalued now? The stock has gained roughly 220% this year and is trading at an eye-watering PE of 109. This is not undervalued. This is frothy. This has the makings of an AI bubble. When the AI bubble pops, it's the retail investors who will most likely get burnt as they have a track record of over-indexing and consolidating their portfolios around a minimum number of names. Don't get me wrong. NVIDIA is a fantastic company, and it is the Road to Autonomy Index component company. At this valuation, it's just frothy. While NVIDIA smashed headline earnings, diving into the numbers a little deeper, the picture's not as rosy. In the quarter, automotive revenue was reported at $253 million, down 15% quarter over quarter, while still up 15% year over year. The growth of NVIDIA's automotive revenue was driven by autonomous vehicles. As autonomous vehicles scale, NVIDIA's automotive revenue is poised to grow, as several companies depend on the NVIDIA Drive Orin SoC for their autonomous driving stack. The overall decline in automotive revenue was driven by the slowing demand, particularly in China. NVIDIA is going to have a long-term China growth problem as Chinese auto manufacturers look to develop their own chips and use Chinese company chips instead of NVIDIA. Then there's the risk of export restrictions to China. NVIDIA could be barred from exporting their GPUs to China. If this were to happen, NVIDIA would be locked out of the China market completely, further decelerating a growth opportunity in one of the world's largest markets. It's not just NVIDIA that faces challenges with the Chinese market. ARM does as well. And with their upcoming IPO in September, look for investors and global regulators to shine a brighter light on ARM China. In the video, is the ARM IPO investable? I dove into the topic. I gave it a deep dive, breaking down ARM's potential headache in China and the economic consequences. I would encourage you to watch the video if you are interested in ARM and their forthcoming IPO. At its core, ARM is a licensing company. Could ARM develop a lower-powered GPU architecture? Perhaps. I would not put it past ARM as they look to grow revenue that is declining and enter the AI chip architecture market. In their IPO prospectus, the term AI was mentioned 47 times. Clearly, ARM is signaling to the market that they are looking to enter the AI chip space. So is Amazon. On Amazon's Q2 2023 earnings call, Mr. Andy Jassy, CEO of Amazon, said the following, in quote, Customers are excited by Amazon's EC2P5 instances powered by NVIDIA H100 GPUs to train large models and develop generative AI applications. However, to date, there's only been one viable option in the market for everybody, and supply has been scarce. That, along with the other chip expertise we built over the last several years, promoted us to start working several years ago on our own custom AI chips for training called Trainum, an interface called Inferentia. That are on the second versions already, and that they are appealing price performance option for our customers building and running large language models. We're optimistic that a lot of large language model training and inference will run on AWS's Trainum and Inferentia chips in the future. End quote. Mr. Jassy just signaled to the market that Amazon is diversifying away from NVIDIA. Yet very little attention was paid to the comment, as the market has blinders on when it comes to their bullishness on NVIDIA. In the quarter, Amazon's AWS revenue grew 12% to $22.1 billion. The growth was driven in part by Amazon's AI offerings, while at the same time, Amazon's AWS pipeline remains strong and robust. In our opinion, AWS customers will begin to opt for Amazon's in-house AI chip architecture because of lower pricing. We are already seeing this with AWS customers 3M and Omnicom. Could Amazon be a bigger threat to NVIDIA than investors realize? Or Alphabet, which is in its 7th year as an AI-first company with $118 billion in cash on their balance sheet? Google has developed their own AI chips called tensor processing units. Another potential threat? Then there is Apple, a company that clearly has AI and autonomous vehicle ambitions. Apple has developed their own chips called M, based on ARM architecture. The M chips have been a huge success, and they are powering the sales of iPhones, iPads, MacBooks, and iMacs. The chips combine CPU and GPU and are low power, but high performance. Another potential threat to NVIDIA's growth that investors have overlooked? Possibly. While investors have overlooked, in our opinion, the potential risk posed to NVIDIA's business, they are starting to turn their attention to the investment opportunities in autonomous vehicles and autonomous trucks, as regulators are beginning to offer clarity on the regulator. Governor Gavin Newsom of California has signaled his support for autonomous trucks in California with no safety driver. Newsom's administration has forcibly opposed autonomous trucking restrictions in Assembly Bill 316, commonly known as AB 316. Ms. Dee Dee Myers, senior advisor to the governor and director of the governor's Economic Business and Development Office, sent a letter to Assembly member Andrew Curry that stated the following, end quote, AB 316 circumvents the process and effectively bans heavy-duty autonomous trucks without safety drivers in California, and it runs counter to our state's business climate, where thoughtful policy, innovative ideas, and inclusive culture combine to fuel the creation of new industries while protecting public safety, end quote. Ms. Myers is correct. California is the home of innovation. The iPhone was invented there. The statements being made by Governor Newsom's administration are not just positive for autonomous trucking companies based in California, but for the entire autonomous trucking industry as a whole. We applaud Governor Newsom and his administration for standing up to organized labor and doing what is right for the California economy, the residents of California, and the companies that want to invest and create jobs in the state. Autonomy is good for the economy. Autonomy is coming. Autonomous trucks and autonomous vehicles will help to usher in the autonomy economy. Today, we're merely at the starting line for what is to come with autonomy and its economic impact. In the future, autonomy will be one of the world's largest industries. Autonomy is a business, and there's an index to track its performance. The autonomy economy is coming. Follow the Road to Autonomy Index, ticker Autonomy, on your favorite finance app. Again, the ticker's Autonomy, AUTONOMY. Be sure to join us again next Sunday for the latest installment of the Road to Autonomy's This Week in the Index. The future is bright. The future is autonomous. The future is a competitive GPU market.